Good morning, everyone. Okay, what do we have going to happen today? Well, things are getting pretty tight here up at resistance, understandably so, but buyers just not giving it up at all. You can see this little dip, and the buyers just stepped right back up again. So they're aggressive on any move to support, but scared to death at resistance. They don't want to take it higher. So I guess this is where we're at today. And things are pretty quiet so far this morning. And let's just flip this over. I wasn't getting data before. Get a better view. And I brought this up yesterday after the Fed minutes and the historical, normal jiggles that go on and as to where the market direction. And there's this old thought about, okay, it's the third move. That's the real move. In any event, unless you're a scalper or you have an algo that's able to trade, the best thing to do is just stay away during that period of time and wait for the dust to clear. But another thing I said was, let's move out to a higher time frame, the 60-minute chart, and things were just going sideways. So those little gyrations that were going on the smaller time frame in reality were meaningless. Nothing was really going on other than the computers and the positions that were hedged were bouncing off of the walls there and going nowhere in the end. So we'll see if today brings some decisiveness to the direction of this market at resistance, meaning can it break through it? And does it break down? But you can see over the last several days, it was pretty tight here, but after it broke out, the range contracted, little what I just call as a baby topping tail. And then yesterday was a narrow range bar with tails on the top and bottom. I long forgot what you might call that in candlestick terminology. It doesn't mean anything to me anymore. It just tells me that momentum continues to slow. And in essence, it's as if the brakes are being slammed to the floor and coming to a screeching halt right at this resistance area. Have the uncertainty about whether going higher. And that's smart, is to say, you know what, if you bought along the way here, it certainly doesn't make sense to be aggressive at an area of resistance after 100% retracement. So what might happen here? Well, obviously up, down, or sideways. Up may not be the most bullish thing to happen, as that might be a blow off kind of a move that just ends things. I think the most bullish thing it could do is frustrate everybody and go sideways for a period of time and work off these market internals that are at an extreme now. And you can see even yesterday, the close was 0.795. So a lot of call buying into the close, and up in this area of resistance, you have the wrong way option traders building calls or long positions with expectation that prices are going to go higher. I have seen them be right on rare occasions. I can't remember the last time at a market resistance area after a run like this that they actually got it right. In any event, without the history to show it, I just rely on my memory, and they're wrong the majority of time. So I pay attention to them and have for decades, and it's paid off. So we'll see where we go today. Hopefully it's not a narrow range day like that. It can make intraday trading a bit choppy. A lot of things were. The trade in Tesla worked out very nicely for me. And I'm not sure where it is today. I know Dan had an option spread trade on that, and we'll see how it all works out, but he'll cover that. And Qs, same story, little narrow body there. Tried to move up, failed, tried to go down. A1 tried to go down, couldn't go down. Dead neutral. So if you look at the closes over the last 5 days or so, pretty much in the same area, and over the last 3 days, almost exactly in the same area. So going nowhere and just jumping up and down. Russell has been, I guess we call the star here, but now it's up at its 200 MA. It's going to be widely followed. Reference point, I don't know. I don't see anything to the left, immediately to the left there. In any event, it's a reference point that we always pay attention to on the daily time frame in an indice. And so 301 in Tesla, no big deal. It's actually, I don't know how much lower it went, but I think it went down to 300 yesterday. And so it's looking good. And so we'll see where this all goes here. And whether, again, as I said, probably the last couple of days, as things move up into resistance, at a minimum, to get some type of bearish bias, we need a break below a prior day's low and a close below a prior day's low. And that is not happening. Right? We had that happen here, and buyers stepped up immediately into this area of support, whereas prices have begun to accelerate higher here. So we don't have this little shelf of support as we was here, over here, which opens the door to potentially a deeper move. So keep that in mind. Transports, inside day. So a little bit of a range expansion and inside day. Anytime I see that after a move up, I think breakout bar failure possibility. Now, if today breaks down below that inside day's low, that signals the beginning of a breakdown bar failure, and then we'll see if it breaks below this wider range bar. So keep an eye on that, right? Maybe make a note, breakout bar failure, price will move up, little breakout here, right? So it's breaking out above these most recent highs. You get an inside day, and in the Master Trader Technical Strategies course, I define it exactly as it is here, with a minor topping tail on the breakout bar. Right? So historically, looking at, I don't know, hundreds or thousands of those setups, that was part of what happened. There was a minor topping tail, not a full topping tail, then an inside bar, then it broke below. And you can associate this type of a pattern, even if you're an intraday trader. If this was a 5-minute chart and you saw this pattern and it broke below the low, get out, take your money. And lastly, the diamonds, which are right up into this resistance area over here. Everything is, and prices are stalled for that reason. And futures are down a little bit here and starting to give it back, but still the hourly chart is in an uptrend, but we've got a breakout failure. Now, these breakout failures pre-market over the most recent past have not worked to produce something of real significance, meaning it didn't start the break of this daily trend. Maybe it will now that prices are at resistance and the internals are lined up. And that's one of the reasons we use internals, is because when they do line up and you get a pattern signal, historically it follows through, whereas without the internals, it has a lower odds of following through. Topping tail on the NASDAQ futures here, and just look at every day. 1, 2, 3, 4, 5. Well, we don't know where this is going to end up, but all the closes in the same spot. And this wasn't too far away from the others. And, you know, over these days, closes in about the same spot. So a big stall in momentum, in volatility, and making intraday trading somewhat more difficult to find things that are moving. We'll see. We get a little turn beginning there. We'll see what happens, as we do every day. Dow futures, same story. Right? Same little go nowhere areas here. We'll see if today ends up a red day and how deep it gets down into that prior bar. So we'll be keeping an eye on that obvious place of resistance. So that happening, you know, is expected. But so far, you know, as we have our systematic analysis of price patterns, I think a wide range bar. Well, it's a wide range bar after it's not an extended kind of a move, meaning isn't a whole bunch of bars to the upside, but it has been trending. But the other side of it, all of these bars are in the top part of the wide range bar. So whatever's going on here with momentum stalling, in no way can we say it's really bearish, because just staying up here at the top of that bar is actually bullish in the face of resistance. Buyers are not running for the exits here. But once they have something of significance, like a nasty red down bar, with the internals as they are, that'll begin to shift. Now, bonds may be saving the day here for equities. We'll see. But if they had broken to the upside, well, that would have been a concern, because yields, as I explained yesterday, pre-market, would be coming lower, and potential for an inverted yield curve, which is close. We'll see.
Yeah, Greg, even Bullard on CNBC today he acknowledged that, yeah, the recession risks have increased based upon the yield curve. But you know what? Another question on bonds for you, Greg. I was reading in the paper that, worldwide, particularly in Europe, which has, much slower growth story than us, said there's $11 trillion of money that are paying negative yields in bonds. So, we know Japan's been in a problem like that forever. But my question is, why would somebody put their money to park their money and actually have to pay via negative yields versus bringing it to the U.S., buy our bonds?
Well, what bonds are they buying?
With foreign, they're buying their own bonds, their own government European bonds, which are giving negative yields.
Well, people buy bonds because they have a view that there's limited risk there, or anyway, whatever their I guess if they hold to maturity, their risk is defined, whereas equities at this point is not.
Well, and Alex actually has a good point. There is currency risk in that scenario. But Alex, unless you're a big old
buying their own bonds.
But do you think
the country is buying their own bonds, they don't have a currency risk. If they're buying another country's bonds, that's another story.
Right, that's what he's saying. To answer my question of why don't they rush over here to buy U.S. bonds? That's right. They would have currency risk when they collected their money, both ways. They would have to, they have currency risk both ways, correct?
I don't know. Let's call them up and ask. Okay. Continue so you can go. All right. Oil's still doing well. And the oil stocks, oil ETFs. Right. There was that weekly sell that was negated, and these look like they will continue to push up here. So oil stocks or oil ETFs look like a place to be here, with a relatively tight stop. Well, they look good. OIH. Well, it tends to underperform, but looks good. And XLE, more diversified, moves a bit slower. But in any event, the energy sector looks like it's going to bring up the rear, as we say. And gold, you can see everything here is down a little here this morning. Nothing much. But, gold starting to back off in the wide range bar there, which may be a heads up that this very nice move is over. And we looked at the weekly chart yesterday, and I'll show it to you. It is up at price resistance, so a logical place for the upside to slow down. And that's it, Dan. All yours, buddy.
All right. Good morning, all. Yeah, I like bringing different stories from the journal, the ones that would obviously affect us in here. Opens. was looking at this save SAVE for a call spread, but the 65s are only a dime, but that's a beautiful lower high M pattern on the weekly there. You know, we were looking at jets yesterday with LUV. LUV looks like a continuation short. Some people, you know, I read one newsletter said, oh, that's a big move down. So they actually are recommending a bullish trade on this. Gustavo, do you want to buy LUV at the open? Tandem covered call doing great. We'll roll the calls tomorrow. MRO I just mentioned. I triggered on a 1, 2, 3. X, we have a covered call, and we've capped our gains. So, you know, we'll just have to decide whether we want to stay in it or just let them take our merchandise at a profit tomorrow, provided it's above the call, of course. Golf Delta, I triggered 2 days ago, yesterday inside day. We need something to get it moving. There was actually an article in the journal today about Russia saber rattling about, you know, they're going to start pointing their missiles at us if we do something or other, putting some mid-range missiles in Europe. Maybe that'll get the military popping a little bit, who knows. Deck, put spread, INCY did not trigger yet. J and J, I sent out an alert. This is going to be our problem child of the morning. It was, well, at least pre-market here, it was gapping to our stop, which was this bottoming tail bar. Bouncing a little bit here. I have it in a window here in the bottom right. And that's a fact of swing trading. You're going to get gaps in your favor and against you. And I read in the journal, I'm assuming that's the reason it's down, that the either the SEC or Justice Department, one of the governments sent them a subpoena, so they're being looked at. OUT or long stock as a pre-earnings trade. LGF.A, we're short stock. LGF.A. Had a nice close at the low with a topping tail, hopefully under yesterday's low. It will pick up some speed to the downside. Our urban trail stopped us out yesterday. Our covered put, but I said I like this as a brand new trade. So under yesterday's low, that is a new short. Target did not trigger. We're in TJX though. Long stock, KMB, long stock, PSX. Alex mentioned this, and I said I liked it, but I didn't want to take the overnight risk over yesterday's high, or, you know, we'll keep an eye on it, maybe 30-minute high or something. Gappers, Kilo Lima, this thing's been a beast. I put a chart lesson in Facebook group about the 2 separate 1, 2, 3 breakouts. This one just being a no-brainer one right there on 123. It's gapping up though, it's extended. I got no trade there. I think Greg just talked about the sector being not a good place to get on board. This is a sloppy buy setup. The retracement was deep, but you see right here, you got a week and a half of support, reversal bars. Gapping up to 117. It's sloppy. It looks, I call those things little penny stock toys. 89 bucks. Now this one's a little like this too excessive. I would have loved it if it were gapping more to 84. And then 90 would be, you know, my target. Car, 33.70, too excessive. Fit is not a gapping stock, but I just saw it going by the ticker, so I wanted to look at it. But look at the daily, weekly, monthly. This could be, you know, maybe a covered call doing a core trade. It's not I wouldn't do a directional right out of the gate, but if we can get some premium to lower the cost basis. So let's keep an eye on that. CNSL was gapping up to 1120, coming back a little bit, but it's still a bullish gap. Keep an eye on that. C block getting whacked. 1313 way the heck down here. It's a very bearish gap. It's a sell setup on the weekly, and it's not bouncing that much. Let's keep an eye on that for a 30-minute low. What do you like about Baidu, Ladon? 87 bucks. This has just been a churning uptrend, but nothing for me. Nothing to do with it. It's not, I mean, it could be a day trade short, but it's not ideal. The gap and craps, I like vertical up, not self-churning with, red bars ignored. Yeah, I got DPZ up here in the top right window. Kendi, 860. This was a beautiful consolidation here. Beautiful multi-week, but no setup now. Foot Locker was up a lot more, 61. I don't like buying these after 7, 8 bars up. Wendy's, 17 and change. That's a bearish gap. So that would be a call spread if there's any juice, or 30-minute low. Vips, 650. That's a bearish gap with a price void up and down, but it's not a tier 1. This one might be a buyout. That's a massive gap, and it's kind of going sideways there. Wow, that's massive. Look on the weekly, it's even off the charts. Wow, I got no interest in that. ACCO, I posted a chart lesson on Facebook on this today. It's not my classic definition of filling the gap within 30 to 60 minutes, but the messages are still the same, because then you got 4 bars of churning higher. Now it's a breakout on the weekly with a price void. So I'm going to keep an eye on that. There's our J&J we talked about, DPZ right here. 261. Now this was one, Greg, I actually, because of this gap to support here on earnings, if buyers step up, I might, consider a condor or, put spread, but I have it here in a window to see what it does.
A lot of ways to skin a cat.
Well, that's right. So, but Ladon knows the 2-step process, right? Step 2 is I need an intraday setup.
Yeah. And
it's either going to be bullish, bearish, or no trade. NEM, no trade.
Well, I'll watch to see what you come up with, but for an iron condor, I'm not sure the setup, and well, unless you have a very short time to expiration, that's going to work out. But hey, I'm interested to see. I want to find a setup that maybe this thing's ready to, will continue to drop several dollars. But
okay. Well, here's my thinking. Let's say we get a bullish first 30 minutes. We get maybe a wide range bar looking like this or whatever, and so then my condor would be 300, 310, and 240, 230. But that's if it sets up that way. A alpha, you're gapping down to 76.50. So that's it's a bear island gap trader. So maybe 30-minute low and or call spread. I like. I'll add that to the list here for call spread candidate. Victor Golf. Pro gap 875. Yeah, that is nasty. Yeah, let's keep an eye on that for a short, both directional and income. Nike, 8360. It's right at weekly resistance, so that's a call spread candidate. Sure, I'll put that on the list here. All right, where did I leave off? The cruise line business, bullish gap, but no pattern. And then Trader was asking me about his cousins, RCL. I wouldn't, 120. Wow, that's popping at 120.